When did you last close a brand new high net worth business owner who came to you cold? Not a referral, not an existing client, someone who had never heard your name before and ended up signing a $10,000 planning engagement with you. If that number is low or zero, I want you to stay with me for the next 15 minutes because I'm going to show you exactly why that's happening. And I promise you, it is not because your marketing is bad. It's not because your offer is wrong. It's not because you haven't found the right agency yet. It's because your ideal client is structurally invisible to every acquisition channel you have been told to use. And once you see why, everything you have tried in the last 2 years will finally make sense. I'm Yuvraj Ambore. I run TaxFlow AI, a done-for-you appointment system built specifically for tax planners. I'm not here to teach you tax strategy. You know more about that than I ever will. I'm here to solve the one thing your certifications, your softwares, and your coaching programs never solved for you. A pipeline with right clients. That's this channel. Here is the reality nobody in this space says clearly. Tax preparation is a pull market. Every March, millions of people open Google and type CPA near me. They have a deadline, they have intent, the search exists. You just have to show up. Tax planning is a push market. Your ideal client, a business owner doing $2 million in revenue, taking home $500,000, does not wake up and Google proactive tax planning strategies. That search doesn't exist. They don't know what they don't know. And no amount of SEO, no amount of content, no amount of referral ask changes that structural fact. This is the single most important thing I'm going to say in this video, so I want you to really hear it. The channels that work for compliance actively work against you in high net worth planning. It is not a failure of execution. It is a category mismatch. And the sooner you see it as that, as a structural problem, not a personal one, the sooner you can stop doing things that were never going to work and start doing the one thing that does. Let me prove it to you. LinkedIn outreach. Everybody says LinkedIn. The problem is a business owner who just sold a division of his company is not sitting in his LinkedIn DMs waiting to hear from a tax planner. He's getting 40 cold messages a week from people he doesn't know. Yours is one of them. Then there is cold email. Same problem. Worse deliverability. And if you're trying to reach these people during Q1, when they are buried, you're talking to someone who physically cannot respond. Strategic alliances, wealth advisors, attorneys, insurance people, everyone in this space has been told to build this. And the data is brutal. For every 10 high net worth clients you send to a wealth advisor, you get one back. The relationship is almost always one way, and it takes 12 to 24 months to find out. BNI, Provisors, Chamber of Commerce, wrong room. You'll walk out with a pipeline full of small business owners who want tax prep, not planning. None of this is your fault. Every single one of these channels was designed for a different buyer. You have been using tools built for a pull market in a push market. That's it. That's the whole problem. So if your ideal client isn't searching for you, where are they? They surface through life events. Not keywords, not seasons, not geography, life events. A business owner just sold a company for $3 million. A founder just hit a $500,000 equity comp year for the first time in his life. Someone just inherited a commercial property. A couple crossed $2 million in business revenue and their accountant is still doing their taxes the same way they were at $400K. These are the moments when the gap between what they are paying in taxes and what they should be paying becomes real money. These are the moments when a conversation with you is worth $80,000 to them. The problem is, these moments are invisible to keyword targeting. There is no Google search for I just sold my business and I need to know what to do with the tax exposure. The trigger happens in life, not in a search bar. So how do you reach someone at the moment a life event happens? Just before they have even articulated the problem. You use the channel they live on, not the channel they search on. A business owner still scrolls Instagram on Sunday evening. He's still on Facebook. He's a human being with a phone. And the targeting capabilities on those platforms, layered household income signals, business ownership data, life event overlays, lookalike audiences, can surface him with a precision that Google search literally cannot. I know what some of you are thinking. Facebook ads feel cheap. My clients are sophisticated. I'm not running ads next to supplement companies. I hear that, and I want to address it directly because that instinct, that identity tension is exactly why most established planners keep doing the wrong things for a year. The channel is not the brand, the creative is the brand, and well-constructed educational ad targeting $500,000 plus household income business owners does not look like a discount offer. It looks like a peer speaking to a peer, and it reaches someone who don't know they needed you before your competitors even know they exist. Let me show you what this actually looks like, because I don't want this to be another video full of theory that you can't do anything with. The targeting stack is not small business owners in Texas. That's amateur. The stack is layered: household income over $500,000, business ownership signals, life event overlays, lookalike audiences built from existing high net worth planning clients. You're not casting wide. You're fishing in a very specific pond with very specific bait. The ad creative or graphic they see is not hires for tax planning. That would get ignored. The ad creative on Facebook or Instagram surfaces the gap. It makes the problem visible for someone who didn't know they had it. Something like, if your business revenue crossed $1 million this year and your accountant hasn't mentioned cost segregation, PTET, or QBI optimization, you're probably leaving $60,000 to $120,000 on the table. Here is how to find out. That line lands, not because it's clever, because it's true. It's specific, and it speaks to someone at exactly the moment a life event made it relevant. They click, they opt in, and here is where it gets important. Not every opt-in becomes a calendar appointment. There is a qualification layer between the ad and your calendar. An AI agent pre-screens business revenue, whether they are the decision maker, whether they have urgency. Only confirmed qualified prospects land on your calendar. Everything else is filtered out before it wastes your time. And if you have tried Facebook ads before and gotten garbage, a pile of W2 earners wanting $400 tax prep, I want you to understand what happened. The channel wasn't wrong. The targeting was too broad. The creative wasn't specific, and there was no qualification layer in between. Remove any of those three things and the system breaks. All three have to work together. Here is what it looks when they do. An enrolled agent in Scottsdale. She had 8 planning clients, world-class delivery capability, but zero predictable way to find the next one. 45 days after running this system, 3 new high net worth engagements, $42,000 in new advisory revenue. She didn't change her offer, she didn't change her pricing, she didn't become a marketer. She just finally had the right people sitting across from her. That is not a lead generation story, that is a pipeline story. And it's a completely different thing. So let me put the full picture together for you. Step 1, live event targeting on Facebook and Instagram surfaces business owners who don't know they need you yet. They are not searching, you are intercepting them at the moment the event happens. Step 2, a problem-aware ad that makes the gap visible for the first time. Not a pitch, a mirror, they see themselves in it. Then step 3, they opt in. An AI qualification agent pre-screens in real time. Business revenue, decision maker status, urgency, the bar is high. Most don't pass, and that's the point. Step 4, the ones who do pass land on your calendar as confirmed appointments. Pre-screened, pre-qualified, already aware of the problem. You walk into a discovery call where the prospect already understands they have a gap and you are the person who can close it. That is what the system is. 4 steps, no mystery, no black box. And here is what it isn't. It's not a funnel you manage. It's not LinkedIn content you produce every day. It's not a referral relationship you have to maintain. It is done for you so that you can do what you are actually good at. Delivering world-class tax plans to people who need them. You don't become a marketer. You stay exactly who you are, a tax planner with a full calendar. So this is what TaxFlow AI does, and here is how we stand behind it. 10 qualified high net worth appointments in 45 days, business owners, decision makers, people who showed up, confirmed appointments on your calendar. If we don't hit that number, we keep working until we do, and we refund what you paid. So not results may vary, not subject to market conditions. 10 qualified appointments in 45 days or your money back. That's the commitment. If you want to see exactly how this works for your firm specifically, the link is below. It's a strategy call, no pitch, no pressure. You'll walk away with a clear picture of whether this fits your firm and your capacity right now, regardless of whether we work together. So link is below, check it out.